Welcome back to Precision Trader University. In this video, once again, I want to show you how you can use the number one leading indicator available to traders today and use that indicator to find free money all over the stock market every single day. So with that in mind, if you've watched previous videos, you know with BOOKMAP, it allows you to see all the major liquidity in the market, buyers and sellers, where they're positioned at, and you understand, and we know that the market loves to gravitate to major levels of liquidity. All right, these act as tractor beams, magnets, sucking the price into these levels. So it gives us a wonderful insight as far as being able to expect the market to go to. So with that in mind, we're going to start here in the pre-market. Again, if there's ever a stock of interest that you have for the day, please come check it out on the pre-market. Look at where the major liquidity is. Now, again, this is signified, the major buyers and sellers signified in a heat map. Orange and red levels are what we're looking for. Okay, and we're looking for them specifically on the $5 increments on over here on the right. So if you can see it on the $5 increment, then you know that you have something that qualifies as major liquidity, and it's something that the market can suck that price into. So with that said, DE, looking at it here in the pre-market, all right, we know we got major liquidity here at 425. We know that's a very real possibility. And then we got all kind of liquidity sitting up there at 450 as well, $20 away. So again, your bias is, yeah, hey, this thing can easily come down here, get support on this 425 area, 425 to 430, and they can absolutely get it up to this 450 level today. So again, if you're someone who likes to play momentum and you see the momentum, and again, one of our strategies is the momentum on liquidity. So we'll see if we could have identified some spots there. So anyway, so this is DE John Deere. And let's see what proceeds to happen from the open today. Now, we open up, pull back into 425. Okay, what did we say? There's a good chance it can come back into that major liquidity there at 425, suck into that, get all those buyers. And then if it can show support on that, bounce off that, where is it likely wanting to go? Where's all the major liquidity at? 450, 450. So, but again, it has to prove itself along the way. Now, where does it prove itself? Well, first and foremost, our next major level was 440. So what do we have to do whenever we're playing a stock? Okay, we have to understand the market is going to gravitate to these major levels. And when it gets there, all right, now, if we're already in the trade and we're playing momentum into those levels, all right, we always want to take our profit just in front of them to be on the safe side. All right, now, whenever it absorbs those major levels, so when these orange and green levels disappear, so it absorbs them, all right, all those orders are filled, and it pushes through on average about $1 or so. It's going to push through about $1. So we always are going to need to see that pullback on that major level of liquidity. All right, that right there is what will confirm whether or not this is going to turn into momentum to the next level or it's about to fall through the floor. So again, we're always looking for that. If you're looking to play some really high probability momentum, playing with the flow, you have to see this. You have to see the major liquidity absorbed. You have to see that pull back into it and then wick off, bounce off, bam. That's your confirmation that you can continue to play this trend. Until that happens, you have to be taking your profit in front of these major levels. So let's see what happened here. So again, this was a lower float stock, moving high on earnings, all that kind of stuff. So like I said, it was flying. It was flying. So with that said, gets up to 440, blast all the way up to 442. They got to come back and retest the major level. Again, this 440 is a major level of liquidity. Okay. So it pushes through it, comes back, retests, support. Now, what is that telling you? Hey, they can go to the next major level, which in this case was up here around 444, 445. They get there, they pull it back $2-3 off of that. They finally go back up because again, where are they trying to get to? All the monster liquidity up at 450. It's just sucking it in. Okay, strong gravitational pull, pulling into all this monster liquidity. Now, the thing that you have to take in mind with something like this is when anytime I'm playing something that's a high flyer, moving really, really quick, one of the most important things that you can always do also is go find out what your ATR is. The ATR for per day, not the average ATR, because a lot of times it'll be a 14-day average. No, I want you to go adjust it to get the individual day and see what the highest range of ATR that you're going to look at on average. All right. So you take that, for example, we did that on Burlington yesterday. Burlington was another one that was just flying at the on earnings at the open, did almost identical to John Deere. What did we do? We found out what the ATR was. We confirmed it with BOOKMAP. It was there. Bam, it topped out at the upper level of ATR perfectly. Okay, we shorted it right around 390, dumped straight back into 380. Free money. Same thing here with Boeing or John Deere today. Again, when this thing was getting up here to 448, 449, 450, again, sent out the alert in the Discord. Hey, told them to be ready for 449 to 450. Okay, it could dump at any moment. I sent that out again. Look, it came out at 447. Sent that out when it was at 447. Had plenty of time to take advantage of it. I said, hey, it could dump at any moment, but we know it really wants to get to this 450. Well, what proceeds to happen? You start having all kind of front runners start coming in the book. 448, 449. I mean, just look at this. Just monster amount of orders start getting drugged down from this major liquidity. Because again, you got some coming here at 447, 448, but man, it pulls off of that, pushes back up, and then look at all that it just starts filling up. All right, that's a good sign. That's a good sign that they're ready to dump this thing at any moment. So anyway, we got technically we came up about 60 cents short of the 449, 450 range. But again, in a situation like this, something hit its by far the upper end of its ATR. It's at monster liquidity. There's no major liquidity above this level. Yeah, it's just one of those that you just got to understand it can dump at any moment. So anyway, see what proceeds to happen. From there, we get a nice pullback into the 443s. They pop it back up. More sellers come back in, 447. All right, this is bear flag liquidity. So you reject, come back up, liquidity comes in, bear flag. They knock it right back down. Comes back down to the VWAP, they pump it back up. Bear flag liquidity comes right back in. Again, you definitely don't want to be buying no dip when you see that. When you see this instantaneously coming in the book like this, no, thank you. So with that said, they continue to dump it, get it all the way back down below 440. And yeah, it was just, it was a dump fest. So with that said, yeah, I've been able to play all the high flyers over the past several years now. I mean, your GMEs, your AMCs, Moderna's, I've been able to play them all successfully with the help of BOOKMAP. Because again, I can go in and I can see, okay, where's the monster levels at and where are they likely wanting to push to? And then once they get there, I know there's going to be a ton of profit taking. All right, prime example, this was GME, the first earnings after the initial blast, when they blasted off. They had that next earnings, monster liquidity sitting in the book at 350. I knew they wanted to get to 350, and I was like, yeah, made it very clear. Hey, this is golden short spot on GME. So, and sure enough, that one was pretty crazy. That one went from like 350 to 180 in like 20 minutes. I mean, that one was insane. Yeah, you definitely can't expect that kind of crazy dump on the regular, but it was just one of those that without BOOKMAP, I would have had no idea that 350 was the key spot. That was the spot. So anyway, like I said, BOOKMAP is just, yeah, it gives you enough, gives you what nothing, no other indicator can give you. I mean, it's really that simple. You can't put a price on it. I mean, for example, here with with John, this John Deere stock. Can you imagine understanding, being able to play this thing? One, you have the bias up to around 450, and then and also two, understanding, hey, when it gets up to close around there, they're going to be wanting to dump this thing, no doubt. So anyway, extremely powerful knowledge. I mean, it's just amazing being able to take advantage of it. So let me show you a couple. I'll tell you what, I'll just show you one more for the sake of time. Again, there's plenty of other opportunities out there every single day, but I'm going to use one here that's a household name, NVIDIA. So, all right, now on NVIDIA, we start the day here at a major $5 increment here at 160. And if I flip over here to the $5 increments, where's all my major liquidity? 165, 170, 168, and there's really nothing within $10, $9, $10 of me blue. So where's all my major liquidity? To the upside. So my bias is that NVIDIA wants to push today. All right. And then whenever it pushes to these key levels, hey, I know I got some very, very much free money that's going to be given out at these levels in the form of pullback money. So see what happens. All right, now NVIDIA gets support on 160. Beautiful there. Had a little bit of sellers come in at 162. Gets up to 162. They immediately dump it back into the 160s. Bam, gets up here. Now again, what happens? What do we have to see? We have to see the absorption. It's got to disappear. And then we got to start seeing support. And that's exactly what you get on these 1 minute candles. So support, again, if you're playing, you want to play to the momentum, you want to play up here to all this liquidity, hey, great probabilities. You just have to understand the stop loss has to be back down here, just underneath, just up underneath this liquidity. Anywhere from usually 30 cents to $1.50. It's got to be, that's the sweet spot. All right. More times than not, you can be, 30 to 50 cents below it, and you'll be nice and protected down there. But if you want to be ultra safe, then yeah, $1.50 is the golden increment. So actually $1.55. All right. So with that said, gets on top of it, support. They want to get up here. Sure enough, they get up to 160, 163, 164, right? Or is actually 164. All right, run into some liquidity there. They pull back on that. All right, pull back, 50 cents or so. Come back up, absorb. So it's absorbed. They come back, support on it. All right, they push up to the next one. 164.50, more liquidity comes in. They pull back on that around $1. But again, all the major liquidity is still up here, and they haven't got to 165. 165 being the by far biggest major level of liquidity around that area. So finally come down, and then finally they push back up to it. There they go. They got it. And what do? They absorb it. So this is a prime example why I teach my traders, hey, if you're playing into this level, if you're playing momentum into it, that's fine. But you always take your profit just in front of the major liquidity. It's non-negotiable. You have to do it. Okay, because this right here, this happens more times than not. Now, again, it's not that it couldn't have come down here and recovered and got back up there eventually, but you have to understand, why in the world would you want to give $1, $2, $3, $4, $5 on a rejection back and have to watch all that profit evaporate? Whew, there's no need. It's much simpler to just, take your profit. If it absorbs it and pushes through, comes back, support on it, then then you can get back in. There's nothing wrong with getting back in, but the stock has to continue to prove itself at every major $5 increment of liquidity. Until it does that, you're going to expect this right here. Your expectation is, bam, you're going to get the dump. So with that said, beautiful example of the SML, the short at major liquidity on NVIDIA. So with that said, hope this helps you out. Like I said, when you're trading some high flyers, like John Deere today, Burlington yesterday, again, you can trade those, with confidence. Again, you just have to use the power of BOOKMAP to help you to understand, okay, where are my key levels? And then also to use something that is about, very valuable, like an ATR. Look at those historical ATR values over the last 6 months to a year on the daily chart. And you can quickly see, okay, where is the upper end potential of something that is, earnings, crazy volume, stuff like that. And doing that will be able to allow you to paint a beautiful picture of where you're going to have some very high probability money just wanting to be handed out to you. So anyway, hope this helps you out. If you want more help with it, be able to come and take advantage of this live with us every day. Again, I'm teaching people every single trading day. We're using BOOKMAP, and hey, we're taking advantage of all these 3 strategies. And finding these areas where the market is just handing out free money. So yeah, it's a beautiful thing. So if you're interested in trading with us live, doing this live, getting more education, feel free to come check out the Discord server. So with that said, appreciate your time and hope you enjoy the rest of your evening.